We're watching out for you tonight on the Willis Report.
Facebook's mega deal purchase of the messaging service WhatsApp for $19 billion has many of us asking, is it really worth that? Here to weigh in our financial power panel, Greg Stewart, Top Turns Capital co-founder and CIO, Bell Point Chief Strategist David Nelson, and Larry Fishelson, co-founder and COO of Dynalink Communications. Welcome all. David, I'm going to start with you.
Sure.
$19 billion? I mean, really? And they don't even want to explain why they're paying that much. Well, what do you make of this?
Well, you know, when I first saw the number, it was pretty shocking, I thought. And, you know, Mark is over in Barcelona, and he's talking up the deal, and investors are obviously embracing it right now. But a couple of points, you know, at $19 billion, you know, price matters. And at some point, you know, it implies that they think they're going to sign up about half the planet. That may not be likely. And what really disturbed me, Jerry, was the conference call. I thought analysts were actually going to genuflect when Mark started speaking.
Wow.
Because they were talking 10, 15 years from now in terms of monetization.
You know, it's interesting to me how much respect this guy commands and what he's able to do. Larry, what do you say?
I think it's a bold move that they needed to make, and I think it's a great move. You got to look at it. They have 1.2 billion users, the most powerful operating system on the planet. They continue to grow with evergreen advertising. This is 450 million users and growing 1 million a day. So this is a strong platform, SMS, that could take over all texting, all telco in that space. So if you cross-platform it, it could be huge, and I believe it will be huge. I own the stock and think it's continuing.
We got a split ticket here on views. Greg, break the panel up here. Are you pro or are you con?
I think I'm on the con side of this. It's unclear at this point how there's going to be synergies, what the monetization plan is going to be, and again, 10 or 15 years is just a long time. I think.
You know, on the other hand, how many times have journalists and long-term investors called for CEOs to make those bold long-term decisions? You know,
exactly.
Damn the torpedoes, full speed ahead. We want some real vision here, and now you have it. Nobody likes it.
But at some point, you know, you discount backwards with these things. You know, you look at it in the future, and at some point, you count backwards and you come up with a price for this thing. And they're talking about monetizing this 10, 15 years from now. If there's anybody on the planet that knows what the social media space is going to look like in 10 or 15 years, I'm not even sure Mark is that guy.
Larry.
Yeah, but everything has to be long-term, because this is the whole new move to the tech ecosystem with e-commerce and mainstream advertising. So you have to make a bold move like this. I think it's a great move. I think the fact
isn't that kind of that's the rhetoric we heard in 1999 that
there's
you know,
a difference
we're going to look in the future.
But there was a difference in 1999. You had companies that didn't have 1 billion plus users and there was no revenue behind it. This company came out at $3 billion in revenue with $1 billion in profits. Real money, real revenue. Mainstream advertising continues to grow month over month.
So does this tell you that there's a bubble in technology and it's only going to burst and it's 1999 all over again? What do you say?
Well, I would actually wanted to interject before. I think, having 1 billion users but no revenue doesn't really mean anything. And
Facebook has
but on your
revenue,
question,
so if they didn't have revenue,
this isn't Facebook. Right. This is WhatsApp.
But that's
yeah, this is WhatsApp. So on the question that you asked me, though, we don't see the valuations yet anywhere near what they were back in 2000. Even though we're overvalued here, we think we're overvalued in the market 20 to 30%. I think we're nowhere near where we were back in 2000. Valuations were much higher back then. So a bubble, I don't think we're there yet.
I would agree with that.
All right, so we think there's no bubble, and we have mixed opinions on Facebook and the value of this purchase, obviously. I want to talk interest rates. Let's talk something real, something that hits me every single day. David, I'll start with you. Are you worried? Are you concerned that the rates are going to pop here, that inflation might go as well?
I don't think inflation is going to be an issue. And when I came into the start of the year, I actually thought interest rates might spike to 4% on the 10-year. I no longer think that. I think as long as the Fed keeps the Fed funds rate close to zero, the spread between the 10-year and the Fed funds rate, it's about as wide as it ever gets. I think we're okay.
Larry?
I think we're going to see the rates low actually for the next couple of years, and that's why you have to, why you have to be in equities, and you have to just continue to be, and especially in mutual funds, spread yourself out.
Now we have agreement. Greg, what do you say? Tell me it's something different.
I'm going to take the other side of that argument. I think you've got a lot of demand. You've got a lot of demand coming out of the market at this point. You've got $1 trillion buyer in the Fed that's going to be out of the market by the end of the year. I think you see the fund flows with retail investors, with overseas investors, and so forth. I think that we're setting up that the demand is going to fall faster than the supply is, and so we see interest rates higher this year.
Well, how high?
I think we could see 375. That's about 1% up from here, which for the year that would be I think we started the year around 330, so not too much higher from where we started the year, but from today, obviously a lot higher from where we are today.
David.
I think we're going to likely stay around 3%, 3.25 tops right now. And as I said, the Fed funds rate is the key.
Last word, Larry.
Yeah, I agree. I think the rates are going to stay low. You have to be in equities. You have to put the money into play. And if you will, I think you're going to be rewarded like we were last year.
I think Facebook should give us real details. That's what I think. I think we need some real information out there. Guys, thanks for coming on the show. Greg, David, and Larry, great job. Appreciate your time. Thank you so much.
Thanks, Gary.
Wow.